All right, folks, it's Saturday, August 2nd, and I hope that you got some strong coffee and some cash on the sidelines this morning because XRP is breaking down, presenting another incredible buying opportunity for those who are looking to acquire this asset. And in today's video, we're going to talk about how this is just pure XRP controlled manipulation. That's all this is, and it's not just XRP, it's the broader crypto space, as the largest asset managers, hedge funds, and institutional investors in the world are looking to literally allocate trillions of dollars to this asset class. We just had one of the most bullish weeks in crypto history, and yet the market's coming down. So how do you make sense of this? Well, that's what we're going to attempt to do in today's video. I appreciate everybody for stopping by. And if you guys want to join us in our private community for our Saturday morning Discord weekly calls, just head on over to ZachRector.com and you're going to sign up through Patreon to get access to Discord. We'd love to have you in there. And so, yes, Eric Trump coming out and telling us, let me say it again, buy the dips. Bitcoin, Ethereum, well, he forgot one of those. That'd be XRP2 and some of these other great utilities based in America. It's just hilarious, right? That these guys are shilling nothing but Bitcoin and Ethereum. Let's get Eric Trump and the rest of the group there caught up to speed on what the real alpha is. It's definitely not Bitcoin and Ethereum. Now, XRP did break down below $3 here. Has a lot of folks worried, and we're going all the way down here to 288 as I record this update. Now, this is something that we have to watch closely here because there is resistance, I should call it support, at 270. So the next big line of resistance is at 270, and I'm updating the Discord group here I just did yesterday on the most recent buy order I've placed on my XRP long position. I'm still long XRP, not scared about this at all because I don't over leverage myself. I don't allocate all my capital, and I break down those trading strategies for my Discord community, and I've let them know what the next level I've placed my buy order is at. But once again, if you don't have your orders placed, good luck getting them filled. So, I got my platforms. Coinbase is down again this morning on the futures platform. That's where I'm trading my futures. I haven't had any issues with Caleb and Brown going down at all. I just cashed out some more out of their platform yesterday. No problem. Sent them an email 5 minutes back. Yep, it's coming. Next day, cash is in the bank account. But for trading, I just set it in, forget it over there. They've seemed to be doing good, and I'm on Uphold along with using the XRP Ledger DEX. If you guys missed my update last week, I did a tutorial on how to use the XRP DEX to trade. But it was a massive week, folks, and there's no reason to be shaken up here. Spot Ethereum ETF record inflow streak. SEC approves in-kind creation and redemption for spot Bitcoin and Ethereum ETFs. Once again, why did I title this video XRP Controlled Manipulation? This is all part of the Bitcoin, Ethereum, and Tether free pass. They're now allowing in-kind creation and redemption of the spot Bitcoin and Ethereum ETFs before we even have spot XRP ETFs, right? It's absolutely controlled manipulation and suppression. You can't make it up. But the New York Stock Exchange, CBOE, and NASDAQ file for framework to list crypto ETFs. They're going to streamline this process. White House says ushering in the golden age of crypto. SEC launches Project Crypto to literally tokenize every single market. JP Morgan partners with Coin. Who cares about that? But you get the point. I mean, the point being JP Morgan and everybody is trying to come on in. And that's why I titled it Controlled Manipulation. They're all trying to make their move because they know that the old system's crumbling. And I'm going to show you data to back this up right here next. I'm not just saying this. They know what's happening. And they know how exposed. It's so bad that they can't even tell. They can't even tell you how exposed they are to the global derivatives market in this global margin call that's unwinding right now. This is from MB on X. Check this out. I haven't seen anybody cover this yet. The banks are having a little issue here. ISDA, the Derivatives Association, a little issue. The banks say, hey, if we report these swaps, the global financial system will collapse. The regulators say no more, fam. Got you covered. Not a problem. Don't worry about reporting it. What are we talking about? We are on the verge of the largest swap implosion in history, bigger than the Great Financial Crisis. These CFTC get out of jail free cards are merely a band-aid. Now, what this is, it's the CFTC issuing a no action letter regarding swap data error correction notification requirements. You want me to give this to you in English? As long as the errors in their reporting of their swap data does not exceed 5% of the reporting counterparty's open swaps for the relevant asset class and swaps for which it was reporting counterparty, you're good to go. So that's per asset. So, I mean, you could have different assets. Your reporting could be way off. But as long as it's not more than 5% of any one asset that the counterparty is exposed to through their swaps, you're good to go. Basically, they're not being forced to report the errors, and there's a massive amount of errors within their swaps, so much so that the banks gave notice to the CFTC saying, hey guys, if you require us to report this and fix this issue, the whole thing's going to blow up. I'm putting this into simple, easy to understand terms for everybody because they use all this jargon that makes it kind of confusing, and you're never going to see this reported on CNBC. You're never going to see this on the mainstream media. I haven't seen anybody cover this yet. They just issued it on July 31st, but it once again reiterates what we've been saying. You have the Japan carry trade, but it's all part of a bigger global margin call. You know, it's not just an issue in Japan. Back here in the States, many other countries as well too. Nobody wants to buy their bonds. And then you move into the traditional markets, there's quadrillions, and it's the shadow asset class. We can't even track it. That's why I say the banks can't even tell you how exposed they are. They don't even know themselves. You know, and the CFTC is literally allowing them to have up to 5% reporting error through this no action letter. The whole thing's about to explode. The good news is that on the other side of this, the tokenization of all these markets should bring about a level playing field and full transparency in markets, which is what we've been pounding the table for quite some time. Now, Vlad Tena from Robinhood, he says, now the IPO season is back. We have seen a lot of enthusiasm and engagement with our IPO access product. Some IPOs have been incredibly oversubscribed, both from institutional and retail, and this has been great. We are working hard to continue to advocate for retail and make sure you get the allocations you deserve. Plenty more to come. And so this new company, what is it, Figma, that came out, the ticker's FIG, they just went public and they Robinhood allowed retail investors to buy one stock of that pre-IPO, okay? Which is a great way to, you know, for the investment bankers and the insiders to get exit liquidity on the retail and just dump on your heads. Here you go, peasants. You get one little share, and you allow all these millions and millions of people to be exit liquidity for the investment banks. They love this. Now, what I love about where this is going is it allows for the tokenization of these markets and free access and transparency and price discovery so that the investment bankers can't buy these companies up and take them public for pennies on the dollar and then dump on retail head, rinse and repeat again and again and again, which is what our market is right now. And it's funny because Vlad mentions this after I just had John Deaton, digital asset investor, and Brad Kimes on my show yesterday to discuss the ongoing Link2 bankruptcy, which is a whole situation. If you guys don't know what's going on, check out that video. I've done a few updates on it so far. It's a situation of a company that was trying to bring pre-IPO to the retail investors, non-accredited, very noble cause, and it was a massive success. You had one CEO and Bill Saris, the founder, who was pushing, and he did cross the line, it appears, in a few instances. How bad is it? We'll find out. But basically, private equity profiteers, this is a dream for them because they were able to come in and basically take over this company and say, oh, wow, there was so many violations here. And even despite the fact that we have no debt, we have cash and we have billions of unrealized gain in our equity, we're going to have to take this company through bankruptcy because there was just so many violations. And we're going to have to take all these shares from these good investors and we're going to have to take them for ourselves. And don't worry, we'll give you your money back, but you're not going to be able to get the shares because there's a couple violations here and there. Meanwhile, you have SEC Chair Paul Atkins saying that he wants to lean into innovation. If you're not committing outright fraud, they want to spur innovation. They want to work with companies like Link2 that are trying to, really fulfill a noble cause in bringing access to the private markets to retail investors. And so it's just funny to be watching this all unfold. It's actually sad as well because this is a real situation with billions of equity potentially being stolen from Link2 investors. Meanwhile, Robinhood's bringing pre-IPO to the peasants, and I joke and I say peasants because it's just laughable to me that these investment bankers, they allow Robinhood to dump one share on their investors' platform. It's kind of silly versus what Link2 was doing, where they were allowing full access and they had no management fee on it at all. It wasn't a 2 and 20 structure like how these funds typically work, right? But anyways, we'll keep you guys up to date on this. The whole derivatives market is set to implode. They're doing everything that they can, and this is just simply a band-aid that they've slapped on this. Okay? And I'm hoping here the fall of this leads us into the next IPO boom of good, solid companies that are actually building real businesses, right? Not just the IPO boom that we saw during the .com bubble of a bunch of pretenders and people come, fly-by-night IPOs, but long-lasting, great companies that are going to actually help make America the leader of digital assets in the world. That's companies like Ripple and others. Okay, now, speaking of Ripple, we finally get to take a look here at their National Trust Bank application for the OCC. This is available now for public release. You guys can check it out. Here's a few key points here from Wrath of Kahneman. Ripple is applying to a charter, a limited purpose OCC regulated national trust bank. It would enable custody of RLUSD reserves and operating regulated infrastructure for tokenized finance and future Fed access. So it will not be for retail. The CRA says it doesn't apply to national banks that don't engage in any lending or deposit activities and whose business consists exclusively of fiduciary activities. So no deposits or lending, strictly B2B banking and infrastructure. The trust bank is explicitly built for RLUSD, no mention of XRP. Now, this is his conjecture. It behooves Ripple to distance its XRP from the bank's regulatory application to avoid conflating an OCC-supervised trust bank with a token at this point. That said, nothing precludes future XRP integrations. So basically, let's not muddy the waters and make any issue. They've already had so many issues with the XRP token. So when it comes to the OCC Trust Bank charter, they don't mention it, but there's nothing stopping them from using it down the road. This is interesting because it means that Ripple Labs owns the bank, issuing their own private stock to the executives. Also interesting that it is confidential. A friend remarked that it is common for businesses interested in an IPO. And I've been saying Ripple will have the largest IPO in the history of the world. Summary, we know Ripple wants a national bank charter to create banking compliant subsidiary to handle tokenization management. They are not seeking a money transmitter license or deposit insurance. If they were granted Fed access to, they would become real liquid infrastructure. And it should be noted that they already have over 60 plus licenses worldwide and many money transmitter licenses within the United States at the state level. So they're ready to do that. But this national trust charter, this is for B2B tokenization, RLUSD being the focus. Love to see it. And they're going to get accepted. And they're going to be one of the most trusted institutions in the world, partnering up with the oldest bank in America, BNY Melon, for custody. It's a great setup. And Cowboy Crypto notes here that one of the key organizers and board members of this is going to be Tim Keeney, who is retired vice chair of BNY Melon, who was responsible for custody of 25% of global institutional assets while he was there. It makes a lot of sense seeing Ripple partnered with BNY to custody RLUSD. The rest of the board is absolutely stacked as well too. We'll talk more about that later. Now, I want you to listen in. This is the top financial advisor in the world, highly respected, Rick Edelman. And this is why I titled this video XRP Controlled Manipulation. In my opinion, the market makers are not just attacking XRP and squeezing out XRP. It's the rest of the crypto space as well too. All these guys are getting their ducks in a row. And they got the market makers on the phone. And they're telling the market makers, squeeze the hell out of these retail Joe Blow who think that they get a piece of this action, that they should own some XRP, that they should own some other utility cryptocurrencies. We haven't amassed our position yet. Wreck these guys. We want blood in the streets, metaphorically speaking. Maybe they want, these guys are willing to take us out. And that's exactly what's happening right now. While they're getting ready to deploy trillions of dollars, please listen. This is the top financial advisor, one of the most respected and considered the top financial advisor in the world, Rick Edelman. And a shout out to DAI for clipping this one up for us. Take a listen.
Virtually every insurance company, brokerage firm, bank, hedge fund, pension fund, endowment fund, sovereign wealth fund, family office. They are all engaged in due diligence right now, studying the crypto question. Should they invest If so, how and how much? And they're on a various part of their journey. Some of them have already reached the conclusion and they are already investing. Others are engaged in the due diligence process. And it is a process. These institutions don't move quickly. These teams, for example, investment committees, they typically only meet 4 times a year. Board of directors, they only meet 4 times a year. If it takes them 4 or 5 meetings to figure this out, you're talking about 18 months to 2 years before they finally allocate. So the process will take time. I'm anticipating the next 12 to 24 months, you're going to start to see trillions of dollars flowing into crypto generally, I think Bitcoin mostly, specifically. And as those assets flow, the prices are going to rise.
Now, that's where I disagree, is that it's mostly going to flow into Bitcoin. I mean, obviously, if you can only get exposure to a Bitcoin spot ETF and an Ethereum spot ETF, you don't have many options. So we need to get Rick Edelman caught up to speed on XRP, real utility, and real ROI, because we're destroying these cryptos. It's not even close. So to maintain being the top financial advisor in the world, let's get Rick caught up to speed. And this is the problem, is Joe Blows like me. I don't need to go to my committee. I don't need to call up my 401. I don't need to call up anybody. I deposit it from my bank. I say, hey, Caleb and Brad, hey, Jake, I'm going to deposit some more cash here, and we're going to go buy this crypto. We're going to go buy this utility. I don't have to go through in committee. I don't have to go through any of this. Full control, right? And so this is our opportunity. Take advantage right now of the controlled manipulation. You thought it was suppressed, and the reason why it's hurting more right now is because we're not at 30, 40, 50 cents. It's because we just hit a new all-time high. We're up at $3. A lot of people are in profit. And so when that starts to come back down, people start to panic and get worried. This is when you should be leaning in, doubling up, tripling up those positions, and lowering your cost average and taking advantage of the opportunity to stack another 10,000 XRP, another bag of DAG, another bag of these good utility assets that will run the new financial system, that are going to outperform Bitcoin and others. And some of these guys, these guys are getting caught up to speed. They're finally getting into crypto. If they want the real alpha, well, they need to subscribe to this show, and maybe they should get tapped in with our Discord community too, because we're printing a lot more. So this is just getting started, because when you're considering trillions of dollars flowing into this asset class over the next 12 to 24 months, let's talk about what happens. And we've been talking about our multiplier. And what happened here is Dom Kwok, Harvard grad, very smart guy, much smarter than me, he put together a whole, I don't even know, this is like a whole code that he wrote, put together a whole program. I don't even know how to describe this, right? He put together this whole model for testing out the XRP market cap multiplier. And what they're showing right here, this model shows that XRP needs only 10 billion in buy orders to hit $90. And in this assumption, they are running with only 1.9 billion retail XRP being available. So there's a couple of different variables to this equation, and I've always kept it simple with you guys. One of the assumptions here is 1.9 billion retail XRP being available. That's a big assumption. It's probably true, like close. What is the real number of available XRP of on these exchanges? Because this is what makes that multiplier even more dramatic. So when you're talking about, and it is coming, JP Morgan says 4 to 8 billion. I say 10 to 20 billion. Most of the experts say more than 10 billion. BlackRock's going to show up to this party too. Billions and tens of billions of dollars are about to flow into XRP. Play around with the multipliers all you want. It's a double-digit XRP with ease. Is it 10, 20, or 30 bucks like I'm saying? Yes. Could it potentially be 90? Absolutely. I can't rule it out. It's just simple math, and the inflows are coming. So position yourself correctly. Get tapped in with us. We aren't going anywhere. We will not be shaken up. We know the game that they're playing. We know how they play the game. And we just continue to position ourselves, staying liquid, staying prepared, and nothing's going to shake us out. God bless all of you guys. Make sure you stop on by ZachRector.com for all of our community resources. Have a fantastic weekend, and I greatly appreciate your support. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.